going ahead. Hi Rakesh, congratulations. Another significantly great quarter for Bajaj Auto. I think you were spoiling investors by outperforming every single quarter. But let's start with it. What's worked for you? This quarter, I believe domestic demand was the key driver. Exports are also seeing a little bit of recovery on better product mix. So give us the key highlights.
Good morning, and yeah, thanks. It's been a very good run. FY24 has been a year of multiple records, highest ever revenue, EBITDA, free cash flow, PAT, highest spares revenue, Pulsar volumes, highest three-wheeler volumes, and highest ever KTM volumes in India. So it's a record. But if I have to sort of single out a couple of things which have driven this record performance. The first is really the progress we have made in the upper half of the motorcycle industry, which is the 125cc plus segment. Here, our flagship brand is Pulsar. We've had a slew of launches over the last 6-7 months, and I must say that all of them have been accepted very well in the market. So we have now almost 18 models which are spanning the entire top half of the industry. And therefore, there is a Pulsar for every kind of customer, a commuter-oriented customer, a style-inspired customer, a performance-driven customer. So under the one brand, Pulsar. To give you an idea, we sold our last highest sales of Pulsar was 0.9 million, and this year we've done 1.4 million. And obviously, the margin profile of the Pulsar brand motorcycles is higher. So it has had a very good impact on both the top line and bottom line. Our market share in this the sports segment, as we call it, is standing at a very solid 41%, a gain of 6%. The second thing which I would single out is really the performance of the three-wheeler business, which has done very well. The industry has come back. The recovery, except for one or two states like Delhi, is almost complete to pre-COVID levels. It has been driven a lot by the advancement of the CNG infrastructure, which the government is putting in place. That covers now 60% of the districts of India. And we have seen that wherever the CNG is available, the three-wheeler, a diesel three-wheeler owner just shifts, attracted by savings to the CNG-driven vehicle. We have we have been leading this tech, and we have a 80% plus market share in this. This business has been growing, and on the back of the CNG advancement, etc. So these two would be really the key drivers. There are others, of course, but I would say that these two are the primary drivers behind the stellar FY24 performance.
Mr. Sharma, let's look ahead now. I believe export recovery still is gradual and maybe uncertain. In the next couple of quarters out, do you still feel like the industry-wide domestic demand, which is in expansion mode, could continue to, cushion the sort of slowdown in exports, the uncertainty across the export market, or there are some downside risks, the kind of expansion that the company is currently witnessing?
Well, you're right. The recovery in exports is going to be gradual and uncertain. That is the nature of the beast, given all the geopolitical scene and the macroeconomic challenges which many emerging markets are facing. So, however, in our planning, what we've done is we have sort of divided the overseas markets into three buckets. One is the stressed countries. Unfortunately, some large markets like Nigeria and Bangladesh are in there. And we've taken a rather conservative view of the development here, mainly because it is very difficult to anticipate and predict. The second is most of the other markets, which are very nicely now firmly in a recovery path, mainly in Latin America, ASEAN, Philippines is a large market. And there we are wanting to go faster than the industry recovery. And then, of course, we have new markets and new segments where we are sort of we have recently entered or about to enter. Our plant in Brazil is going to come on stream in May, which will open up some pent-up demand and allow us to expand the network. We are expanding our footprint in Europe. We have entered Venezuela, which has opened up. We have got a very fortunate development in Egypt with the Egyptian government recognizing our quadricycle queue. And as we speak, shipments are going towards Egypt. So when I put these three buckets together, then on the basis of this view, we feel that, and of course there is the base effect of FY24 being low, we can expect some kind of growth in FY25 over FY24 in exports too.
Well, right, Rakesh, we also want to talk about Chetak. I know you have a lot of plans for FY25 going in, specifically because it's in the EV space as well. Can you tell us about what variants we can see being launched in the new financial year, as well as perhaps stores in terms of expansion there as well? What details can you give us here?
Well, Chetak, as you know, has really ramped up in FY24. We used to be number 6 or number 7 player, and we are now number 3. Just in the last quarter, we sold almost 40,000 units, which was what we had sold in the entire FY23. There has been a lot of supply chain and R&D work which has gone on so that, we are at a much better and comfortable position when it comes to the margin architecture. So on this basis, we are expanding the portfolio. We upgraded the product in Q4, and probably in about a month's time, we will add to the Chetak family with another model which will have a more mass appeal. We are taking now this portfolio very rapidly, trying to scale it up. We are in 200. We have 204 stores as we speak. These are exclusive dedicated Chetak stores. And I think in about 6 months' time, within 6 months,